Thank you very much, Joy, and appreciate the short introduction. I was looking over the attendees list, and I recognize a few names, so that's great. And so this is about public library budgets and budgeting. I'll talk about a bunch of different stuff, and I don't want to really draw your attention to this, but it is 60 slides. But I'm going to try to go through here quickly and as entertainingly as possible on the topic. And I just appreciate you being there. And Joy, thank you so much for keeping an eye on the chat box, and interrupt me at any time for any questions. A very, very quick introduction. As Joy said, I am a community development specialist with the University of Vermont Extension. I am former Associate Dean of Finance and Operations for the unit. It's a $20 million a year unit with about 180 employees, and I was responsible for finance there, as well as real estate management, IT, and HR. I do also work for Lake Champlain Sea Grant, which is a UVM and SUNY Plattsburgh shared grant on workforce development. And most importantly, I've been a trustee for some years at the Georgia Public Library and treasurer at the same time. And I just threw in that Peace Corps thing because I did serve in Peace Corps, and it seemed like an audience, you know, library folks, an audience where maybe the population of ex-Peace Corps, returned Peace Corps volunteers is greater proportion than other audiences that I might teach. And I did want to take this brief moment, but a huge thanks to the Vermont Department of Libraries, Joy Warland. You're wonderful to work with, as are the other folks that I've worked with, Laura Keenan and Jason Broughton and Jeanette Schaefer and others. So just thank you. They have a fantastic website up and running, supporting everybody through these very bizarre times of COVID-19. So just thanks. I had sent out, or excuse me, Joy had sent out a quick survey about, you know, some burning questions that you might have that could help inform this presentation today, and we did get some responses, and some of the responses included understanding how library budgets are developed, organized, and disseminated, and best ways maybe to keep track of budgets that have many different aspects. And the writer here meant grants versus public funds versus donations, that sort of thing. Also, there was a question about a burning question about what things are important when considering what level of funding to seek from your town. That is, of course, always a point of discussion, heated and sometimes heated, about how much you should ask from your town if you're a municipal library, or even an incorporated library, of course, because municipal funding is important. Another question is about if you are a new employee, why should this be an important thing to know? And hopefully touch on that. Or not a new employee, but perhaps not the director, but a position that isn't the director. And then there was one library that got a very big bequest, and at what point should trustees and director become involved in tracking that money? So we'll try to answer some of your questions as we go through. There is a bit of terrain to cover, so hopefully we'll get to things that are important to you. The learning objectives today, I've got 6 learning objectives. Appreciate how your vision and values relate to your budget. Understand what a budget is, just like what is a budget, and then be able to describe basic bookkeeping accounting terms. From there, we'll talk a little bit about budget cycle and budget calendar, and then the process about managing the budget. And finally, we'll end up with financial controls. That is, how to keep your money safe, and the things that you should be applying at your library to keep you out of jail.
Gary, Just a second
Yes.
before you go on. At least on my headset, it's a little scratchy. I don't know if anyone else is finding it. I can hear you fine, but it's like not great sound quality. I don't know if there's anything you could do differently, or if maybe I'm the only one experiencing that. Then, but I just thought I'd let you know before we get
Okay,
too far.
maybe is the volume okay?
Volume is perfect, and now two people have said
Okay.
their sound is fine. So,
Okay. It might be the cord on my headset. It was maybe it was hitting so I'll try to be careful about that.
all right, thanks.
And I'm one of the lucky people in the state where I was able to actually, about 7 weeks ago, increase my data speed here at my home. So I actually have a 1 gigabyte down and upload is 30 megabytes. So I shouldn't be having any trouble, but you never know. Thanks for the input on the chat box. Okay, the agenda here is I wanted to talk a little bit about library law and municipal versus corporation, going there, connecting to mission, vision, and values, as my dog barks upstairs, talking like an accountant, what is a budget, and then points in preparing the budget, steps, managing the budget, budget control, and then finally freedom. One of the questions that I sent to you were, what type of library are you? So this is the folks that responded, said that mostly about half were municipal, and then you can see incorporated and community. Is that dog? Can you hear the dog, Joey? I'm sorry.
Yes, I can. I'm enjoying it.
I'm going to take 5 seconds here. I'm going to close the door.
There always has to be a dog somehow incorporated into a VitLib workshop, and this time it's not my dog, so I'm just glad that we can share the dog wealth.
Okay, I apologize for that. It's a small dog. It's a corgi, but she makes a lot of noise. And that bar on the bottom of the slide, this is from the Department of Library stats, the stats that you guys fill out and you send to the Department of Library. 60% of libraries were listed as municipal, 35 incorporated, and 5% community. So in your group today, we have a little higher percentage of community than you'd normally expect, and a little about the same incorporated, a little lower municipal. So the basics of Vermont library law. I won't be talking to any detail about this. I know that you've studied it with Laura and Joy, municipal versus incorporated. You know what I wanted to talk about, what defines these from each other, fiscally speaking. And municipal, of course, is usually a department within a town, and it's been established by vote of the town. The trustees have the full authority to spend public money that's raised on a grand list, and gifts and endowments could be usually managed by invested by trustees. For instance, in the town of Georgia is a municipal library, and we have a checkbook, for instance, which is held by the town. So if we wanted a check cut from the checkbook, we would put in a purchase order to the town bookkeeper. Incorporated was one that was established by a gift, a private benefactor, and it has all the powers of a regular corporation. It's a non-profit corporation. The trustees are the shareholders, and they have full authority to make decisions about the library. And usually when there is an annual municipal contribution, the town writes an annual or quarterly or some other kind of way to pay the library on a regular basis. And I put together this little picture here that tries to describe, at least in my mind, the difference between a municipal and incorporated library. And again, according to the Department of Library Statistics, municipal libraries, they get about an average of 90% of their revenue is from local taxes, is from the town. Incorporated libraries are also quite dependent on town taxes. The average is about 60% of the revenue of an incorporated library is from the municipality. Where it differs, where the big difference is, of course, is in the other funding. Georgia Library, even though we're trying to help support the development of Friends Group, our other funding really is in the grants that we get from the Department of Libraries, and not much else. So, boy, 98% of our revenue, 95% of our revenue is from the town. I know working with other libraries, incorporated libraries, endowments are a big thing for a lot of libraries. Friends of the library also contribute a good funding source, and grants and contracts also add up to there. So so now that you probably know this already, of course, if you're a municipal library, town vote, you're part of a department, you probably have personnel policies that are the town's, and in incorporated, you're really a small private company. You're a small non-for-profit corporation, and you have to set up everything yourself. And where this really makes a difference is the type of accounting system that you might use. So we'll get to that in a little bit. Again, if you have any questions or if you want to stop me for any reason, just put it in the chat box and I can rely on Joy to slow me down. Very quickly, just wanted to say that this presentation that you're seeing today was a 4-hour presentation in October with the last group that was going for the certificate. So I tried to compress all this into 2 hours, and one of the ways I compress this is, of course, Joy has talked to you. You've been taught about vision, mission, values, the importance of your strategic plan. But I wanted to point out that the connection between the budget and your vision and mission and values was really, really important. And the metaphor that I use, or the analogy, is if you think in your personal life, and you get revenue by working, get paid, you show your values and your vision by what you spend your money on. If you think about who you contribute, for instance, money to as a donation or a gift, what causes you support, that reflects your personal values. And the same way for a library should reflect values. One tangible way to reflect values for a library is if you, for instance, have an endowment. How are you investing that money reflects your values. For instance, I am part of a professional organization. I'm on the financial committee, and we recently, this past year, 2019, decided to go to all sustainable funds, investments that were socially responsible investments. So that was important to us. It was a value that our professional organization held. And the same with the vision. Vision is what you want to become, what you're working towards. So the budget really should be used to help you get to that place. If you wanted to do more programming for children over the next 5 years, this is a very tangible way is you do it with money, and that's what your budget can reflect. So that was my little stop off on mission, values, and vision. All right, we're going to switch to more budget related things, and this is like I have about 6 or 7 slides about talking like an accountant. And I don't really mean like that we're going to talk like an accountant, because if you've ever talked to accountants, they're basically unintelligible because it takes them years to learn how to talk like an accountant. And this woman here on this slideshow, if you can see the slideshow, she's smiling. This is obviously not an accountant. She's an actress. Accountants generally don't smile. They're now let's see. Yes, okay. I was having trouble going forward. I wanted to throw this guy in here because he does look like an accountant, doesn't he? And he, de Medici family, you probably recognize that. They had so much gold coin. You know, they didn't have bags of gold coin. They had like buildings and rooms full of gold coin. They were such a wealthy family that this guy is considered the father, quote unquote, of double entry accounting, because they really had so much money that they had a hard time finding out where it was coming from and where it was going. So they developed a process which modern day accounting is based on. And basically accounting is gathering and making rational and presenting information about money, value, and worth. So a double entry accounting, in very simple terms, from a personal perspective, is if you have a credit card and if you have a checkbook or a checking account. Double entry accounting means that in every transaction, there's a place where it's debited and there's a place that it's credited, a place that it's subtracted, and a place that it's added. So in double entry accounting, when you pay your credit card bill, there's a debit in your checking account because you're subtracting from your checking account. And you actually, credit card is a liability account. It's something that you owe, and that's credited to your credit card account. So just as we begin to talk like an accountant, we're going to try to keep it very simple. It can get very complicated, but it doesn't need to be that complicated to run a library. But I had to show you this Cosmo guy. So let's talk a little bit about words that you might hear. And general ledger, you hear the bookkeeper or your accountant, treasurer talking about general ledger. A general ledger is a complete historical record of the financial transactions. So a general ledger will go back as far as the records kind of hold it. So it just keeps track of your revenue, it keeps track of your expenses, it keeps track of assets, all those things. So general ledger just means that it's just referring to the books. And of course, ledger is a book where they used to write down, expenses and revenue in. I keep hitting my keyboard expecting this to go forward, but it's different with Skype here. Chart of accounts. This you might also hear. It's a created list of fields, like columns in a spreadsheet, that's used by an organization to define each class of items for which the money or its equivalent is spent or received. So what this means is that a chart of accounts, when you spend money on something like children's books, the accounting system is coded so that it knows the difference between a child's book versus a young adult book versus a book for adults. So it has a little different part in the chart of accounts, a list of fields like columns in a spreadsheet. I think the best way or one that you might relate to is sort of like the Dewey Decimal System of money. You may be using, or your treasurer or bookkeeper may be using QuickBooks, and there's a chart of accounts in QuickBooks, only QuickBooks, because it's designed by smart people who want to help just regular people understand what's going on, it's translated into better English. That is, that it's very clear that a children's book is a children's book. If you go in the back end of QuickBooks, you may be seeing a series of codes, but this is what it is. A chart of accounts it's interesting, and here I don't know if the legislation in Vermont about reviewing public libraries will pass, with how strange this year has been and how the priorities of the legislature have changed. But there are some states where the libraries have a common chart of accounts. That is, if you spend money on a book in Peacham, it'll be the same line, the same combination of the same account as if you were a library in Milton. So we don't have that in Vermont, and as Joy knows, with the 180 some odd public libraries in Vermont, nearly every one is different, which makes it a challenge to both understand what's going on from a financial perspective in the in the bigger picture, but also makes it more difficult to learn about your own library, because it may be quite different and is likely a little different than just the library around the bend, so to speak. There are a lot of different types of accounting systems, so this is related to my comment about general ledger and about chart of accounts. If you're in a municipal library, it's very likely that your fund accounting is being handled by the town, by New England Municipal Resource Center. They have contracts with, I think, every town in the state of Vermont, and they provide fund accounting, or they provide the accounting. For instance, for Georgia Public Library, that's what our books are being managed with. I put in a picture of QuickBooks here because they tend to be kind of the industry segment leader in managing books for small businesses. So and it's very easy to use. I use Quicken, which is the it's the layman's use of QuickBooks. QuickBooks is for small business. Quicken is for more home use. Even though I have a little small business, I can still use Quicken to do my accounting. This was a response of you folks, or the folks that responded to the survey, about what accounting system you use at your library. We see that Quicken and QuickBooks or other accounting software is fairly popular. I'm not entirely sure was the leading response, and then what the town uses was one. So it's, accounting systems and accounting software is very important to use. For instance, you see on the bottom there, Excel or other computer spreadsheet. While you can do accounting and you can keep track of things with Excel, where it gets challenging is if you have multiple accounts. To go back to a personal example again, if you have a credit card and if you have a checking account and you pay for things through the credit card as well as the checking account, but occasionally you have to pay off the credit card bill, what you see in the checking account, you'll see an expense. It'll be a charge to the credit card account. $500 or whatever it is may be for that month. And in the credit card, you'll see it's really a credit. The money is coming into the credit card account so that it can pay for all things you've already purchased. What an accounting system like Quicken does is it connects those two accounts, the credit card account and the checkbook account. And what it doesn't, what you don't see, what it doesn't present to you is you'd see in your checking account as an expense to the credit card. But that disappears because it's really just a transfer of asset to pay off expenses in the credit card. So what accounting software does is it connects funds, credit card with savings account with checking account, so that you can see it all in one place without being too confused about those transfers of money. I think, again, I'll go back, I think most folks are using NEMREC software if you are a municipal library, but again, I know from experience that it can differ from library to library, and the relationship of municipal libraries to their municipality varies greatly. I'm just going to stop right now to see if there's any comments or any questions. I don't see anything in the chat. But again, if you have a question, just interrupt me. This is a bit of a challenging way to teach such a long and kind of tedious, can be tedious and boring subject. I understand from being on many Zoom presentations that 2 hours is a long time. So we'll try to perhaps take a break partway through. Okay, going on about talking the talk. These are the two important things, especially for an incorporated library, is an income statement or profit and loss statement, and it shows the information on revenue and expenses for a particular period, usually your fiscal year. But it could also be, for the quarter, for the month, depending on what kind of detail you like. But income statement, profit and loss for an annual period, usually your fiscal year, and a balance sheet is a snapshot of your organization at a specific point in time, such as the end of year. And a balance sheet will show you all your assets and your liabilities. And basically, you take your assets, what you own in cash and in investments, in properties, subtract it from liabilities, what you owe for loans, accounts payable, that sort of thing. And that really shows you your net worth. Okay.
Gary,
yes, I see a couple of questions.
Yeah, so there's a couple about the NEMRC that if you could get to before we get too far away.
Okay, so this is from Dina. How would you know? The best way, well, you would know in a couple different ways. First is if your bookkeeper provides a report to you, that it has a very specific look to it. And I've actually got a picture, I think I do have a picture of it in a slide coming. But the best thing to ask is just to ask your treasurer. And the town would be using NEMREC. Library treasurers seldom are given access to the software, because that's one of the points of security and protecting security is you don't let very many people have access to the books. So I have to, for instance, I'm the library treasurer, but I have to request a report on a monthly basis from our bookkeeper. I would like to get read-only access to the software, which would be much better from a budget management perspective, because I could get information when I wanted to get information rather than wait on it. But that's how you would know. Can incorporated libraries get access to NEMREC? I am not sure. I don't think so. The group, the New England Municipal Resource, I forgot what the acronym meant already. They're a private company. They're actually centered here in Georgia, Vermont, and their audience, their bailiwick is town government. So I don't think so, but That would be a question that could be asked of them. And yes, income statement and profit and loss are the same thing. Just switched to Quicken from paper. So Quicken now is the ledger. And if you switched at the beginning of the fiscal year, this will make it, of course, much easier for you. If you had to recreate the fiscal year from paper to Quicken, that's going to be a challenge. So I think that you'll find that Quicken is really, it's wonderful to use. And I know a couple of directors that have bookkeepers that do QuickBooks, and they have access to the reports from the bookkeeper. They can't probably change things or do anything to the ledger, to the entrance, the expenses, revenue, that sort of thing. They'd have to request that of the bookkeeper, but they can read reports, and I think it's QuickBooks Online. And there's the New England Municipal Resource Center. Thank you, Joy. And I do think it is set up for municipalities. In fact, the biggest software, well, not the biggest, one of the most important software that the New England Municipal Resource Center does for towns is also related to the Grand List. And with Vermont Grand List worth about $82 billion, it's a really important software that that listers and assessors in the town use. Thank you very much for your questions. So these things you will hear, profit and loss, balance sheet. In my municipal library, we never hear these words because you can, of course. The town has a balance sheet. The town has an income statement, profit and loss. But the town we're just a department within the town. So, and in fact, well, as a municipal library, you can have a balance sheet, of course, because if you own the building or not. See, every library is different. Georgia Library, the town owns the building, and they've offered us, you want to buy it for $1, and we say no, thank you, no, because they are, of course, responsible for the maintenance and the deferred maintenance and other things that happen at the library building. So didn't want to spend too much time on this because it is a short time that we have and a lot of information to plow through. So
Gary, there is one more. This will be a quick question, probably. The difference between Quicken and QuickBooks, when to choose which.
Yes, thank you, Joy. Quicken is made for homeowners, but can be used because it's got this little business add-on that comes with Quicken. So if you have a small business, you can use it. If you're getting into more the 6-digit kind of budget with assets and capital budget, some other things that you want to manage, QuickBooks is the default for small business. So I would say, depending on the size and how much you're tracking, QuickBooks is really the way to go. And that's what, if you hire a bookkeeper, that's what they'll be using. They'll be using QuickBooks. Very quickly, this as well. Invoice, request payment for a purchase, and accounts payable is money that you owe. Accounts receivable is money owed to you. I think you're probably very familiar with those terms. Now, this is a little different because, again, every library does things a little bit differently. A purchase order is, it authorizes a purchase. So as part of the process of purchasing, usually you go from decision making, or you have authority to buy something. And again, let's bring it to, I'll use my library for example. We want to buy children's books. The library director identifies, of course, what books that we're going to buy. She prepares gets the invoice for the books that she would like to buy. We produce, she writes up a purchase order, and the purchase order authorizes that purchase. And I don't know if anybody else has these, but warrants is a written order that instructs payments. So in Georgia, we go from a purchase order is attached to the invoice, submitted to the town. The bookkeeper produces a warrant which lists the expense and from where it's going to be drawn. That is what account it's going to be drawn from. That warrant has to be signed and returned back to the town, and then you get a receipt. Now, I know that's probably much more complicated than the way you might run things, but you might run into a purchase order or a warrant. But often, if you're doing a QuickBooks kind of accounting, if you're an incorporated library, you'll decide to buy it. You have the authority to buy it because it's in the budget. You purchase it, you get the receipt, you submit that to the bookkeeper as a record of purchase. There's a clear business purpose of why you purchased it, and you're pretty much done. But I did want to mention those purchase orders and warrants in case you had to use those things as well. Now this is going a little bit away from budgeting, but it's also terms that you might run into. A capital budget is a budget that you have set up for longer items that last generally more than a year. So they're not consumed in an ordinary course of business. Like paper is not a capital equipment, but a laptop could be considered capital equipment. A desk is capital equipment. Shelving for books is capital equipment. And that capital budget is usually set up differently, or a separate budget than an operating budget. In the town of Georgia, we have an operating budget, which is an annual budget, and we have a capital budget, which is a 5-year budget. A gift is a donation of money, and an endowment is a donation of money that is meant to not really be used, but only the investment results be used. Now, let me clarify that a little bit better. If somebody gives you money for a gift, they really want you to spend that money now. If somebody gives you money for an endowment, they want it to last pretty much forever, and that's the way that you manage an endowment. Again, I know that the libraries across Vermont differ quite a bit, because when I was talking about these things at the last class in October, no one really knew what I was talking about when I was talking about an impact fee. But our library receives a fee for every house built in the town. We receive $90. So there's an average of like 12 to 15 houses built per year in our town. So we can rely on an impact fee revenue of about $1,200 a year. And then reserve is amount of money that you set aside for future use. The way these two are related for us is that the impact fee and the reserve is used to pay for capital items. So that's how we use that money. A grant, Department of Libraries offers a lot of grants. These are funds that you don't have to pay back, but you need to do something specific with them. And grants always pretty much require some reporting. That's the way a gift differs dramatically from a grant, just in that, is that gifts cannot require reporting. Otherwise, they're not a gift. Because a grant, you're giving them, you're getting money to do something very specific. There are deliverables that you have to attend to and provide, and you always have to follow up with a financial and usually a written report on impact and that sort of thing. Are there any, again, if you have any questions, you just want to stop me for any reason, just send in a little chat there.
Gary, can you talk about restricted donations? Oh,
I can. Oh, well, I will go back to Jasper. Okay, so to go back to gifts and endowments, there are two essential categories of gifts and endowments. There's restricted and unrestricted. And an example of an unrestricted gift is if somebody gives you $20 for your birthday, and this, do what you want with it. So that's what an unrestricted gift is that you do what you want with it. Now, a lot of donations, though, the donor has something very specific, or they want to protect the money somehow as they give it to you. So they'll say, you can only use this money for professional development, or you can only use this money for programming for kids. Now, when you get a restricted gift or endowment, you have to follow the restriction, and you have to account for it too. So that's why we love to avoid restricted gifts, restricted donations, because they set up an extra challenge for us in documenting and making sure that we spend their money on what they wanted us to spend it on. Does that answer your question, Joy? Or would you like to add something?
No, it does answer my question, and I think the challenge with that, like you said, we try to avoid them, but how do we avoid them? And then just wanted to add that, like, part of the problem is with the challenge of them is the person giving the money might not really have a sense of the mission of the library or the what the library is working on currently. So they might give a donation for something that's obsolete or something that the library already has well funded, and then how do you kind of negotiate that?
Yes. I know of a library that was donated a cherished desk by somebody, and it's just like they really didn't want a cherished desk. So I know that a good, well-written gift and endowment policy will kind of like start with, like, you really need to be able to, anybody interested in donating really needs to work with the director to understand the needs of the library well, so that you don't end up getting things that you don't want. And also in a gift and endowment policy, it is also noted that any gifts given to the library are then library property to dispose of as they wish. So it's not always money that's a gift. I have a donation of money here, don't I? But it can be a thing, something. I know when I was finance person at UVM Extension, we had somebody who wanted us to give us a farm, and we didn't want a farm because we had enough trouble with operating expenses, and it would have been fine to have the farm, but it wouldn't have been so fine to run the farm. It would have been, just not a good thing. So thank you, Joy.
Thank you for that very Vermont example.
Yes, yeah. Okay. Yes, this was the little break. Jasper's bigger now. This is Joy's puppy. Okay, we'll get into a budget here. What is a budget? And you got an awe for Jasper there, Joy. What is a budget? Really, it's an income and expenditure for a set period of time. It's just what you plan to get in revenue, what you plan to get in what you plan to spend. And I do want to tell you that after a long time of budgeting, I can tell you that budgeting is like it's just your best guess. And we'll get into this a little bit more, but of course you have a budget and you have to stay within your budget. But I think you can see on the slide here, it says like children's books, $3,500, periodicals, $700, audiovisual, $2,000. Well, this whole budget of ours was just like blown out of the water this year because we have very different needs right now. So we're not really sticking to these line item budgets because that was our estimate last November, and the world has changed. So the important thing is keep your eye on the bottom line. Don't worry too much about individual line item budgets, except personnel. You have a responsibility to keep payroll going to the people you've promised, to hire and to pay, and how many hours that you've agreed to. But it's more of an art than a science. It's not a hard and fast thing, but budgets, you just do the best you can with a budget. But I mean, it's a given that you cannot overspend, but don't get too wrapped around the axle about individual lines within a budget. You're doing your best you can when you estimate a budget, and there is flexibility within a budget. Now this was a response to a question, confidence level, and you can see that low is fairly significant, and then people feel more comfortable at smaller numbers. In the last class, we actually had one of your library director peers is a CPA, so actually that was intimidating to me because I'm no CPA. But let's get through some of this budget to make you a little bit more comfortable. Yes, there's a little sausage maker thing in budget process. So here's some key questions to think about when you're when you're thinking about budgeting. Remember your strategic plan. Always remember what your mission and vision is. And also you, of course, have to know how the library is funded. Is it municipal funding primarily? Do you rely on friends heavily? Is your endowment nice and healthy? And who's on the budget team? Who's putting it together? Is it a subcommittee from the trustees? Is it somebody specific? And what are their roles? How are expenses determined? Who has the final say? Trustees versus board of the select board or something like that. And has a budget calendar been established? Just some things to think about as you go into planning to do budgeting. I threw this up here. This is a simple budget calendar, and on the top is budget month, because some of you have calendar year budgets, some of you have state fiscal year budgets, which is from July through June. Others have federal-based budgets, which is October through September. I know that there are some libraries I've run into with an August through July budget calendar. But the important thing is that the need the sequence of things to do, need identification is really year-round. If you see something now that you really need to change, but you really don't have the flexibility until the next budget year, you're maybe 6-7 months ahead of the next budget, but you've already identified that need. And then there's other things here. Relationship management at the bottom I put as very important. We work continually with our select board, and I know that the Board of Trustees has certain rights and authority and responsibility within a town, and it was set up that way so that the library would be more free from political influence than if it was just subservient to the select board, but we're still have to manage that relationship very carefully and very well. So we meet with the select board often. We had breakfast with the select board chair and the town treasurer, for instance, last August as we're developing our budget. So relationship management is really important in a budget. Of course, managing the budget is all year round, but it's really crunch time when you're getting maybe 4 or 5 months before the budget has to be submitted, where you have to really identify revenue and expenses. You have to prioritize expenses. You have to draft the budget, develop, present the budget, and then finally have it approved. That little orange box to the right is month number 3, which would be town meeting for your typical municipal funding. So here are the steps in the budgeting process. You need to, there's 6 steps that I have. Identify needs, you identify the revenues and expenses, you prioritize the expenses, you draft the initial budget, you develop the budget, the final budget, you present it, and then once it's approved, you manage the budget. Now, I don't know how many of you have a calendar year budget and you're a municipal library, but January, February, March are kind of weird because you have a budget, but you don't have money. But you sort of behave like you have money. But it is, of course, not final until it's voted and approved at town meeting. So that is a bit of a weird thing. If you're an incorporated library, or if your library has a different fiscal year, then the town meeting, the decision at town meeting can be during the beginning of your fiscal year, or it could be several months before your fiscal year begins. So that adds or subtracts flexibility depending on what your fiscal year is and in relation to the town meeting. Okay, we talked about this at some length about identifying needs. The strategic plan will inform what you will be spending money on. I think a library director, more than nearly anybody in town, is connected to what the community needs and what they see. And then the trustees and the director will have, considered long and short-term goals. Really, this goes along with the strategic plan. To go back very briefly to identify needs, 2 years ago we changed, or last year we changed to COHA. So 2 years ago, that was a need that we identified early on. We knew that we needed to change, and that we knew that it would cost money. So that need drove the expense part of our budget. Step 2 in the budgeting process is the sources of revenue and sources of expense. If this was, if we were in a big classroom right now, we could write on the whiteboard sources of revenue, sources of expenses, and where you get this. But since I can't see you, you can't see me. Sources of revenue are what you would expect. The town allocation. Friends of the library, that's a source of revenue. An endowment or two that might be providing you with revenue on an annual basis. There's also sales and fees. You might have a book sale, you might sell t-shirts, you might sell this and that. Fees, if you do collect them, there might be some fees related to overdue books, or there could be like photocopying. You have a photocopier in the in your library, so that could be that can create revenue, because of course you need to charge your clients customers for photocopying, for instance. So again, town revenue is the town allocation is usually the biggest source of revenue, but there are plenty of libraries where endowments, gifts, investments are big sources of revenue. Sources of expense are pretty standard. You've got the biggest source of expense is usually payroll, because that's generally the kind of organizations that we are. Now, it can differ if you own your own building and you've got some bigger issues to deal with, or big maintenance things. But sources of expense can include things that you can just think without even thinking too hard. You know, the books and the audio visuals, there's electricity, there's utilities, there's all those sorts of expenses. Where is this information? Generally, people who budget usually look at historical information. Unless you have a new business or a new library where you have to create a budget out of whole cloth from a business plan and from projections, really most people start with the budget from last year. And that has its negatives and positives. The negative is that we tend to think of incrementally increasing the budget. That is, oh, we can do 2% this year because U.S. Department of Labor is reporting 2% inflation and that's what the town feels comfortable with. Or you can be more, more strategic, think about it in greater detail about, like, we really don't need to spend money in audio visual, and I'm just using an example, this year because we have enough, or the demand is lower, or people can get it from different places. We need to step it up and spend more money on Y instead of X. So usually generally found in your budget. And it's always really good to look back several years to see where you've been and how things have changed over time. I also recommend, and I haven't done this at Georgia Public Library yet, but I'd like to do it this coming year, is really budget 2 or 3 years in advance so that the trustees, the director, and the select board know what direction you're going at, especially if there's a change. Say you want to add an employee. You want to do it strategically, and you want to bring your decision makers along. So budgeting into the future can be very, very powerful tool. At the University of Vermont, we budget 3 years into the future. I don't know what they're doing right now. They're budgeting 3 months into the future right now. So it's not a good place. Are there any questions before I go to step number 3? I'll take a moment and look at the chat box. And we are halfway through the slides, so I hope that gives you some hope of seeing the end of the tunnel. And then the third, I talked about prioritizing expenses, and that's really what's most important, is that you use your budget to reflect your values and your mission and what's important to you. And I said that our library, we switched to Koha last year. We knew 2 years ago, of course, that would mean more hours. We'd need more hours for people. So that was a priority. We had to find money to pay people, and that's where you have to make hard decisions about what you spend your money on. There's a question in from Dina. To what extent should the librarian in a small library be involved with creating the new budget? In my library, where I'm very new, it seems the trustees prepare the budget. I think that the director, the librarian, should be absolutely, totally involved with the new budget, because the director knows so much more about what's going on than the trustees, even committed trustees, even trustees who are really with the program. Because the director, of course, if they communicate well, will be giving them an update at the monthly meeting, but also in between the monthly meetings, there should be communication between the chair and the director, treasurer and director, that sort of thing. Now, if you're new, that's a little bit different because you need to know what's going on, but you should be right there in the thick of things so that you can listen. And that's my opinion. Joy, you have a lot more experience than I do in this.
Yeah, I was just going to add what you said about being new. Obviously kind of get the lay of the land first and see what has been done in the past. But one thing that you can do that's really powerful is immediately start tracking statistics and how your library is being used and what kind of requests you're getting from patrons for programming, or if they want more audiobooks or more digital services. And the director has more insight on that than anyone else does, and those kind of community requests and how the library is being used should influence the budget, and that's what you can really bring to the trustees that they wouldn't know if you as the director weren't sharing that with them.
Thank you, Joy. Yep, perfect. From Jan Jones, our incorporated library building is owned by the town, yet we budget for all building expenses, utilities, maintenance, etc. Is this odd? Yeah, well, I've learned that every town has these different nuances. The relationships, the select board changes, and as trustees board changes change. But I don't know if it's particularly odd. If the building is owned by the town, they should be, in my mind, they should be responsible for the physical plant. I don't think it's odd that you perhaps pay for utilities and for maybe cleaning, but if the town owns the building, it is on the list for the building. And in our town, for instance, the building is assessed at $800,000 in value. Every house that's built there's an impact fee, so the town gets the money from the residential impact fee rather than the library. So the town just redid our lighting in our library. So that, in my mind, is a town expense. I'm going to defer here again to Joy, who has so much more experience with libraries.
So I agree with Gary that it seems like the town, if they own it, should be doing the long-term things, but I'm sorry to say I don't think it's that unusual for there to be these very bizarre setups like that. And again, as Gary's said a few times, it really is different. I think there's 185 different versions of this, and they may not necessarily make sense, but they're very hard to change. So maybe historically there was some reasoning that seemed logical at the time, and it's left over, but I think most of the time it's just a huge uphill battle to try to change a setup like that, even if it does seem counterintuitive.
Yeah, I'm working with one library that the town owns the building, but like the windows need to be replaced, and it's the library's responsibility. And it's I think working towards an MOU with the town is a really good idea, but it takes a good relationship. It takes relationship building. It takes a lot of time. So I'll end with that, I guess. So continuing about prioritizing, you just with your expenses, if you think there's additional programs coming, you have to identify things that might be eliminated or modified, and establishing priorities for these things. I keep referring back to my own experience here. I apologize, but that's my best experience with a library. Is the COHA I mentioned. We needed more money for payroll. And this is where relationship management and relationship building came in very on our favor this year as well, is that we didn't actually cut anything. We increased our budget, and the town was supportive after having that relationship gave us the ability and ease to explain our value to the town and to explain what we were doing so that they understood. So, but if you're in the situation, and I've been in this situation many a time, where you just don't have enough money for what you want to do, you just have to make the hard decisions. This especially hits UVM Extension, the organization I work for, pretty hard, because at relatively flat funding from the state, our inflation on payroll makes us sort of a diminishing organization. You can see that in, like, for instance, the state colleges with the deferred maintenance that happens. So it's budgeting money is always a challenge, and I know what you're up against. Budgeting process: draft initial budget, and then develop that final budget, and then present the budget. Again, I'm speaking to the choir, I know, but showing value, which I see amazing things happening in libraries across the state now. The creativity that, with the virtual story times and all sorts of things that are happening, that value that you're showing is really important, and the relationships cannot be underestimated. That the value of having positive relationships with decision makers. Little pause. We are at 3:12 p.m. There's about 45 minutes or so left, and here we are. Another question. We are incorporated. 85% of funding is from an appeal letter, with the greater part from fundraising. Trustees created our budget. We are now behind on fundraising and stand to lose a good part of our fundraising income because of COVID-19, about 1/4 of the budget. Board does not seem to be concerned, they say, and the director is, Lise is, they say we're okay because we still have money in the bank. This is true because we are, of course, raising money for next fiscal year. But who is responsible? The trustees are ultimately responsible, right? The chair of the board of trustees is the board of a corporation, and the trustees are responsible. Unfortunately, the folks that generally will pay the price, of course, are the worker bees. But I don't know if that, Joy, can you add anything to that?
That's really difficult because it is the trustees that are responsible. And again, this is an example of you probably having more insight into what you really need to run the library than maybe they do. So relationship building, again, just try to articulate your opinion as respectfully and often and with data to support it as much as you can. But that's a sticky situation.
Yeah, the other thing that you could do is get a really good picture, get a, like this snapshot of money in the bank. Like, what's that mean? What kind of money do you have in the bank? How's that relate to your budget? What percent of the budget is that, for instance? And like, budget out a couple years. What does that mean for that bank account if fundraising came back? You could do a couple of scenarios. I think one of the biggest issues for people right now is uncertainty. And if you could do something to decrease that feeling of uncertainty or reduce the risk that you see for the future, it may be helpful to you and your confidence that this will go forward. You'll be okay, and it's an opportunity to also maybe relationship build within the trustees as well.
So, and I'm going to add that this is a time when there are grants that are specifically for this unusual time, because this is happening to organizations in all sorts of fields, particularly the nonprofits. And so there are grants that are specific for this issue. This is hopefully never going to come up again. It certainly hasn't come up in the past to have this sort of situation. So there may be a way that you can get at least a little bit of a cushion from a grant that you wouldn't have been able to get in a sort of more normal times to hold you over till hopefully things get more stable.
Yeah, good point. Good point. How long should we keep financial records? I was going to go to a presentation at my town officer education conference, which I run, which was about records. So I do not know the regulatory answer to that, but we could find out. I know at UVM it's 7 years we keep financial records unless a grant continues to run longer than that. But for general ledger, it's 7 years, but that's probably not the right answer for a municipality. I can look into that and I can find that answer. Just writing a note here. Okay, thank you, Joy. Thank you, Jan, for your question. Another question. I love my board. They're great people, but they feel it is wrong for us to pursue grants while we still have money in the bank. No, no, grants are there because it's for the, grants. If you think of funding, where funding comes from for grants, it's usually federal and state, and grants are there for the public good because people believe that they want to spend the money this way. So no. Joy, do you have anything less strident to say?
No, I agree. Yeah, you need money in the bank and you need grants, especially right now.
Yeah, you should leverage whatever fiscal tools you can. That's like saying we don't want gifts because we have an endowment, or we don't want if you can use it, if it's relevant to what your vision, mission, and strategic plan is, then you go for it. If it, you go for it.
And I think particularly some of the grants right now have a very specific requirement for what they're used for, and you can use that money for that, and not necessarily the money in the bank is maybe not earmarked for the kind of things that are going on right now that nobody thought was going to happen. So that might be a way to explain it to them that, your money in the bank is supposed to pay for next year's salaries or next year's book budget or whatever, but the grant could be for mitigating what's been going on for the last few months.
Yeah, it could be part of the CARES Act, and that acronym says it all, right? Because we care about having people make it to the other side of this chasm. Okay, we're going to talk a little bit about managing the budget, which is really the core of this. Is this like, how do you manage a budget? I mean, you have to know how to professionally and competently put a budget together, of course, but managing it is really important, because if you don't manage well, you can get into all sorts of trouble, like overspending or feeling at unease because you don't know where your budget is. So these first 2 points are get reports on a regular basis and get reports that you can read. So two basic things. So a monthly report is usually generally what you would get, and it would be just about revenue and expenses. In our library, we just have a budget because we don't have revenue. We have the town allocation, which adds up to our budget. So on a regular basis, we get expenses and get reports that you can read. QuickBooks does wonderful reports. NEMREC, the town software, does awful reports. And what I do is I take the report from the bookkeeper. She sends it to me in a file that I can convert to Excel, and then I create reports in Excel that hopefully people can read. Or at least they claim they can read them. So there's also summary reports, high-level reports, and then if there's questions about specific things within part of the summary, there's also a detailed report that you should be able to get your hands on. For instance, if you saw that you had spent $2,000 out of $3,000 of your children's book line, but you want to know exactly what you spent in that line, you should be able to get the detailed report, Baker and Taylor or whoever else you might purchase from, all the listings of what's gone into that expense. Excuse me. This is an example of, this is a little Excel spreadsheet, and I get the report, as I said, from my bookkeeper. And this is an example. This shows you the budget, shows you actual at the moment, and actual just means what's been spent. So this could be the end of October or something like that. But it isn't as helpful as it could be, is it? Because the budget's there, the actual, we don't have any other information. So this date is very helpful because, again, okay, it's in October. So that makes sense. We've spent $86,000 out of the $100,000. That feels reasonable. But how reasonable is it? You can make it even better and have a budget balance. So this makes it much easier to read. You don't have to do the math in your head, and you can see, okay, and then you can immediately see what accounts are doing okay, where you have money, and then you see this like HRA funding. You see you got 20 cents left, so you know that you can't spend much more in there without taking from somebody else. But this gives you a little bit more information. But then you could also convert to a percent of budget. So people can relate better to that. And I added colors, which would indicate, green is good and yellow is kind of caution and red is near zero or below zero. So this helps the trustees and the director better understand it. But then there's another frame of reference is like, where should we be, or relative to the year, what's going on? So this is October 21st. It's day number 294 of 365. Got 19% of the budget year left over. So you can see that we've got 19% of the budget year of the year left, and we've got 14% of the budget. But so this gives us just more information to use. So I'm just using this as an example. Excuse me. QuickBooks gives much better reports than I am able to do on Excel, and much better reports than simple NIMREC software. But this is just one way. You should be able to look at your budget report and understand it. And if you don't understand it, ask the treasurer or whoever prepares the report to prepare it differently so that you do. There's a couple questions. Can you write out the Excel formula to get that percentage? No, well, you can with a date function. I think the percentage you're referring to is the day number 294 divided by 365. I think in Excel, if you have a date, you can actually find out what percent of the date is. But what I did was much simpler because I'm very simple, is that I knew what day it was. I just looked up the day calendar. I knew it was 294. I just divided by 365. Subtract that from 1 and you get 19%. So you can. So that's how I did it. It wasn't rocket science.
Gary, there's a request. Can you just quickly write what you just said?
Yes. Day of year by a number calendar divided by 365. It's taking me a little bit longer than it should be because of my typing skills. Does that make any sense? I'm subtracting it from 1 because it's how many days into the year that I've gone. So if you divide 294 divided by 365, you're going to get 81%. So 1 minus 81% is 19%. That's how much is left of the year. Sorry if that is a bit confusing. But that's how I did it. And this, those numbers just, and the colors help people. People seem to like colors. I also, in Excel, you can have data bars so that it's just bars bigger if it's 16 or 34% than 0. And that's really easy to see as well. Question: if you get towards the end of a budget cycle and one category item is fully spent, but there's a lot left over in another, can you spend the money without ruffling feathers? Yes. Yes, you can. We usually try to hit payroll pretty much on the nose because that's something we've committed to for our employees. And also, of course, there's benefits and things that we have to attend to. On the operating side, and I'm sorry, my slide is about payroll and not operating, but on the operating side, absolutely. And the way that you do it is you talk to the trustees about it. You know, they know what you're doing. You spend money where you think you need to spend it, and what that does is it just you're spending money on what you need. You don't exceed your budget. Excuse me. And you shouldn't really worry too much about those individual lines.
But just to be sure that you're not ruffling feathers of the trustees by doing this without communicating with them about it. Like you can't, as the director, make those kind of decisions without including the trustees in that decision.
Absolutely, yes. Thank you for underlining that, Joy, because and that's what it really is about, is you're communicating with them so that they're not surprised by anything when they see, oh, you've overspent on books, or you've overspent on ebooks this year or this month. You know, why is that about? You've already spoken to them about it. What if you don't spend your whole budget at the end of the fiscal year? In Georgia, the money goes back to the town. I know that you can also ask the town to put that in a reserve fund. In an incorporated library, of course, it's an asset that just rolls forward into the year. Joy, do you have anything to add? You're helping teaching. I really love having you here, Joy.
I would add that if you are in a situation where you're going to give the money back to the town, spend it all before that doesn't happen, because it's a slippery slope, because then the town can justifiably ask, why do you need that much next year? You didn't spend it. And just going back to also when you were talking about the line items, that's also really important information for the future budgets, because it may be that you need to update your line items because maybe you do need more for digital services now than you used to use, or you need more for digital services than you need for periodicals because you subscribe to online periodicals or something like that. Because so sometimes that information can help you realize what you should do in the future.
Yeah. And we'll touch on that. And thank you, Joy. Another thing is that in our library budget, we actually have a line item for surplus. It's called reserve fund. So it is actually an expense in our operating budget, which fills up our reserve fund in the town, and it's an operating expense. So $7,500, it goes right into the reserve. If we didn't have that, it would look like a surplus of $7,500. Hope that helps. And I better get moving. Oh, there's a question from Kevin. We have a reserve fund, but the town doesn't like us to carry over very much and likes us to spend the overflow as much as possible. And that perhaps is for your operating budget. Right, every town probably differs in their attitude about things. It's an interesting comment there. Okay, so get regular reports, keep up on purchase orders and invoices. Paperwork is just no fun, but when you let it build up, then it really is not fun. Reconcile monthly, which is your bookkeeper should be doing this. Don't let questions linger. Like, there was the example of different line items needed to be spent. Just talk to somebody about what you may question about something in a report. So you don't want things to linger unknown. And if you want something changed, ask as well. I mean, if you've seen something that doesn't seem right to you in the report, ask for the detail of the report, and if you see something that's wrong, which happens often, more often than you'd think, where something is coded wrong in the ledger, have it changed so that it's correct. Then understand what you're responsible for, and of course communicate. Communicate. Now this goes back to what Joy was talking. That first bullet, always code correctly. So I've heard before in the past somebody saying like, oh, I spent money on X, but the X line item budget is like 0. So even though it belongs there, I want to spend this item in another line item. But you always want to correctly code. You always want to make sure that expenses are in the right category so that you can plan for the future. And Joy just said, excuse me, if you're doing more ebooks, if you're doing more audio, and you're way over budget on that line, just keep going, because that'll inform you about future budgets. You want it to be correct in your ledger. Budgeting time should be budgeted. And sorry, I have to cough here. Little water break there. Plan for the unplanned. Now this is difficult, but you should always be looking at your budget not as a rigid thing, that at least what internally you can do, but maintain flexibility. Give yourself the ability to be a little bit flexible. Now it is true that you cannot change a budget that's been approved by a town. We got $120,000, that's what we can spend. And we've got all these line item budgets that add up to that bottom line. We can spend differently than the line item budgets say that we can spend. Again, net payroll, we want to really keep that pretty tight if possible. But any changes, we need to maintain flexibility, and the way you maintain flexibility is communicate well with the trustees, explain expenses if they're odd or if they don't line up, so that everybody knows what's going on. I just wanted to let me back up here. I went through budgeting so quickly. But really, if you get the reports that you need and you can understand the reports, then I think that you're doing pretty well right there. And it's really important that you keep up on invoices, you keep up on expenses, and you're paying attention. The treasurer's paying attention. But are there any further questions before I switch gears a little bit? Okay. So I just wanted to talk about budget controls. Perhaps you're not old enough to get this cultural reference that I've used, but Johnny Cash, famous for his bad boy kind of persona, although he really wasn't in trouble very much, and was a veteran and all that. But budget controls, these are important things to know that really keep people out of trouble. And I have experience of being in trouble, which I'll just briefly talk about. And that's why I think budget controls are more more close to my heart than other things. And budget controls, really, you're just monitoring activities around cash and expenses and receipts and everything, so that there are no questions that anything is being done that is illegal, unethical, or otherwise. And it can be really easy to fall into this perception trap. Like if you have a jar of money on your desk where people put money into. I mean, all these things have to be managed so that the perception is squeaky clean and the reality is squeaky clean. So here's an example of implementing control. So the objective here, if you can see the slide, is to live to a ripe, lucid old age. And maybe this isn't quite lucid because there's a settee here with a older woman eating perhaps cereal, but a penguin is on the other side of the settee. The objective, of course, is to live to a ripe old age. So the risks of not getting there are things like heart attack, or you fall, you have an accident, or my driving, forget about my partner's driving. So the controls that we implement in our daily lives to get to our objective of reaching a ripe old age is to eat well, don't smoke, drive with calm, you exercise. These days it's wear a mask, don't come within 6 feet, don't go to any parties, that sort of thing. So that's an example of implementing controls. Now, again, if you're able to see this presentation, you can see the Orleans County record from March of 2011. It's almost 10 years ago. An employee who didn't report to me but was responsible for, I wasn't the financial manager at the time, but she stole $46,000 almost. And that was a real wake-up call for UVM Extension because we didn't have some key controls in place, which really allowed, it was such a disservice to this employee because we should have been much tighter in what we were doing so that she wasn't going to be falling into this because she ended up in prison. She paid back every penny by draining a retirement account. She was not a highly paid employee. And it's just a sadness. So it was basically just a tragedy that happened. So budget controls that you will see around your office, or you should see around your office, or implement are things like authorizations, reconciliations, segregation or separation of duties is really important in accounting and cash management. And then there's some other things. So let's go into a little bit more detail about them. And this will connect to accounting and budgeting as well, in that the first one is authorization. So this is, in order to spend money, you need to be authorized to spend money. And let me take a break right here. How often should the library have an external audit? That's a good question. As part of the town, we have an annual audit. I do not know the answer to that question. Joy, do you?
I do not, and I will see if I can get a hold of Laura, who might know. But I'm going to guess that it's one of those things that's different every place. But definitely probably more frequently than a lot of libraries do. I was going to say how long a library I worked at had been without one, but I won't. But I will be back in touch if I can get information from Laura.
Okay, so we have two questions out there that we need to ask is first, how long do you hold on to financial records? And then the timing, the perennialness of an external audit. That's a good question. So going back to authorizations, it just requires, this is one type of way to control the budget. For instance, as a financial manager, we didn't allow anybody to spend over $500, I think it was, without talking to a higher up. That is, there would be expenditures that supervisors might know about, but that was one type of control we put in so that we would know that people couldn't just go out and spend money. In a library, the authorization really probably rests with the director, and then with the treasurer, and then the town treasurer. So that's one type of control. It's a preventative thing, so that people just don't spend money without the proper authorization. Another example in authorization is a purchase order. So a purchase order usually follows a request to spend money, and a purchase order gives that authorization to spend money, as does a warrant. Reconciliations is a detective way of keeping control. It's it's why you balance your checkbook. It's just like, oh my goodness, my bank has an expense in it that I don't have. Where's that from? Or better is like credit cards. How many credit card numbers do I have because they've been compromised somehow? Because somebody is doing detection. They're looking at data sets, comparing one to the other to identify and resolve discrepancies. In this case, it's more like just balancing your checkbook, balancing the books. Everything has to line up. And that's another way of finding, errors, and it's finding fraud as well. Oh, there's from Susan in Peacham. Bylaws require a yearly audit. Now that might not be an external audit, but it is an audit. And an audit, for those who are just wondering, an audit really is a sampling procedure where the auditor goes through and they just select based on kind of a formula of they find an expense, they want to see the receipt. They want to see the business purpose. They want to see the books. They want to see where that lines up with the expenses, where it was. Was it properly coded? Was it put in the right place? That sort of thing. And if you sample enough, then you get a good idea that the rest of the books are good. Segregation of duties, this is really important, and this is how our employee was able to embezzle, because she was the person who was accepting the checks in the mail for programs. She was going to the bank to deposit them, and she was doing the reconciliation of the account. And this allowed her to change up what was happening. So having Thing 1, Thing 2, and Thing 3, as we call them, at UVM Extension, separated, you really need collusion to do something not kosher. And that seldom happens. So somebody, if, for instance, in our extension office, when you get a check, you stamp it, for deposit only. You write up the deposit check slip. Somebody else actually deposits it and makes sure everything adds up on the deposit slip. And then there's a third person, the financial manager, makes sure that that it reconciles. Physical safeguards are locks. Desk draw sometimes doesn't cut it depending on what you're keeping. So these are just examples of keeping things safe. Maintaining records, electronic evidence, support transactions, that's what your ledger is all about. And then information security system. As you, like me, probably have seen that in just in the last year or two, it's not good enough now just to have a password, but there's dual authentication now, where you put in a password and your bank sends you a text and you have to put in a security number. So that's an example of information security system at work. Excuse me. Sorry. So really that was about it. I guess that was long enough for you, wasn't it? But just to review our objectives, we talked a little bit about how to appreciate the connection of your budget to your vision and your mission and how important that is. The budget demonstrates your beliefs, and what you spend money on shows your values, your mission and vision. I hope that you understand a little bit more about what a budget is. It's really, in simplest terms, it's the revenue that you're going to bring in and the expenses that you'll make for that fiscal year, and be able to understand a little bit about the budget cycle, skipping down to number 4 here, and the relationship of managing relationships with decision makers like the select board, the board of trustees, and how needs assessment really is a year-round kind of business. Managing relationships is year-round, but there are certain times of years that you really have to get pen to paper and get things done. Hopefully you'll be able to describe a little bit better about accounting terms, what accounts payable are, things that you owe, accounts receivable, things that you are owed to you, expenses, revenue, the gifts and endowment difference between restricted gift and an unrestricted gift, and maybe a little bit about reserves, capital budgets, that sort of thing. A little bit increased knowledge about managing the budget. Like the key points are: get reports on a regular basis that you can read, ask questions if you don't understand, keep current with bills, and code correctly because you want the record to be true, not to try to hammer things together so that they're right to the number of your budget. So those are important things, managing the budget, and then understood a little bit more about financial controls. I know that petty cash, I'd love to talk a little bit more about petty cash, but that's something that in Georgia we've put together a way to manage that. It's actually, a protocol in managing petty cash. So those are things that you should have just to protect yourself and to remain above suspicion, because perception is as important as anything. That ends the presentation. I wanted to bring your attention to a evaluation that we'd love you to complete, and I think Joy posted this early on the chat box.
I just did it again as well.
Okay. So there's some more questions. Could you share sample protocol for managing petty cash? And I can do that. I'm writing this down as another deliverable for you, and that's Deborah. I have a cash management protocol that is superior to, well, you'll have to decide. And you'll have to, change it based on your circumstances. Often if you're the only employee of a library, there's only one or two, it makes it a little more difficult, but you can get volunteers and trustees in particular to help you out with that. So is there a list of must-have financial policies? Well, financial policies. I'll think more about that. They generally, I'm thinking of the financial policies I think everybody has to have is around gifts and around endowments. But you should also, I suppose, it would make it much easier from an institutional memory perspective, have a policy about putting the budget together. But I don't know if I've ever seen one. Have you, Joy?
No, I haven't. Good question, though.
Yeah, I have created a template for an endowment policy, and it is at the UVM website. UVM, if you go to UVM Extension or Google UVM Extension Library Education, you should get to the page, and there will be a drop down on for HR things and for budget things. Because I've been working with quite a few libraries on endowment policies. Sometimes they don't even have an endowment policy. Sometimes they have a good investment policy, but they don't have the spending policy in place, things like that. So I'd be glad to share that link with you too. So we have town financial records, annual timing of external audits.
I should say that Laura is writing me back right now as we speak. So if you can do just a little song and dance, or something.
Well, I'll do a dance.
Okay, we're imagining it right now.
not a song. And petty cash management, I can provide that to you, Joy, so that you could distribute it.
Okay, that'd be great. And then if I don't, I'll distribute Laura's answers to the whole class, because some people, it looks like they've signed off.
Okay.
Okay, actually, I do have her answer. These are both questions for a financial professional, honestly. But A, yearly audits are recommended by most financial professionals, but there are different types of audits. And then of how long to keep the records, it depends on what type of record is. I do think that the archives, Vermont State Archives, answers that question fairly often. I mean, I know that people have gone there to get answers to that, and a call or an email to them would. As I was saying that, Laura wrote, Vasara might have schedules for financial records. Yeah, so they might be a good resource for that, and their email. So
yeah, good. So will you be following up with that, Joy, or you want me to?
With which one?
With the audit. Because I also.
So I don't know if Vasar wouldn't know necessarily about audits. I was thinking of Vasar with.
Oh, the records.
The records, yeah.
Yeah. Well, I'll dig for all these things.
Okay.
And the endowment template, I will share the link with you along with the cash management guide.
That sounds great.
Okay, I guess there are no further questions. I really appreciate everybody's time. This is a difficult venue to be in for an hour and 53 minutes, and just thank you so much. And thank you, Joy.
Thank you,
I really
Gary.
appreciate
and
working
thank you, everyone,
with you.
for attending.